What's up, guys? Back at again with another video today. Um, Today the markets are closed, obviously, and we're gonna be talking about equilibrium. So equilibrium is extremely easy. So equilibrium. All it is the first 50% or 50% marker of when smart money is going to get in. That's all it is. So this is gonna be a relatively short video, but yeah, equilibrium is super easy. I use the Gone box on TradingView. All it is you put it at a low and then you put it to a high, and then price is going to gravitate towards equilibrium. That's all it is. So right here, there's this low right here, that we have this high, and it literally smacks it perfectly. And then it goes back up. Obviously, this is a confluence, and you need multiple confluences with this strategy because sometimes it'll hit equilibrium and then it'll keep going down. So right here, equilibrium from this high to this low, because this one didn't get hit. As you can see, this low didn't make it down to here. This one didn't make it down to there. Right here, it didn't make it down. So right here, we're waiting. There's a retrace. Bam, hits that 50% marker on the retrace, goes back up. So all we're doing, all my strategy is, I'll show you, let's show you Wednesday. So all my strategy is, we have buy side and we have sell side. Say sell side gets hit, or buy side gets hit right here. And I talked about this in the last video. Fair value gap. Getting filled. Barely. But wait, what do we have here? We have another fair value gap. Gets filled. So what do we have? We have buy side getting filled. So let me go down to, we'll go down to the 5 minute on this one. Actually, we'll just go down to the 1 minute right away. And so we go down to the 1 minute. And we have this low right here. Let me get rid of a couple things. We have this low right here. We have this 1 minute low. We have this 1 minute high right here. What happens? Goes into this. 50% marker gets filled. And then goes up. So you wouldn't be just like, okay, equilibrium gets hit, I'm getting in. You would be like, okay, there's a fair value gap right here. That's another confluence. You see right here, it breaks structure to the downtrend. Right here, you can see that. Broke structure because it reversed on an inverse fair value gap. It broke the inverse, meaning it's going to go to the downtrend. Meaning it has to break this if it wants to go to the uptrend again. So then you would have gotten in on, this candle. Oops, that's a short. Gotten in on this candle. Say you put stops right here. TP right there, because that's where. Or what you could have done is you could have seen this hourly, and you could have, it would have been super risky, but it would have paid off on this trade, maybe not other ones. And then bam, it goes all the way to sell side liquidity. And it's just from equilibrium. And equilibrium, all it is adding another confluence. And that's all it is. So right here, We have the break of structure. Broke structure, get in. That simple. And then also with equilibrium, I usually tend to put my stops at the low of my equilibrium because that's when my trade is really going to get invalidated. And that would have been a huge stop loss. 69 ticks on S&P is an insane stop loss. And I just probably want to take in this trade. I usually just put my stops above the equilibrium, and we'll get into stops and take profits in later videos. But yeah, all equilibrium is just it has to go up, goes down, hits it, continues going up, because that's where more money is going to get in, more liquidity gets in, and then it keeps going up. Show you some more examples. Let's see. I mean, right here we have a low, we have a high. Bam, goes down, fills this fair value gap right here, continues going up. It's kind of that simple. And obviously this has to match your daily bias. So let's go over here. So in order for equilibrium to work, the one thing you need is daily bias. 2, you need another confluence. 3, a break of structure. And then you can get into the trade. So once you have your daily bias, and then if you get another confluence, like a fair value gap, order block, inverse fair value gap, BPR, any of the things. I'll go over BPRs and inverse fair value gaps as well. I'll probably do both of those on Wednesday and Friday. But if you can just keep adding those confluences, the equilibrium is going to come with it. And more times than not, equilibrium just kind of gets hit and you really don't think about it at all. So it's like right here, the S&P has been in a huge uptrend because Donald Trump just got elected November 5th. And right here, the market's going to have to revisit here. It's going to have to revisit all the way down to this 50% marker at some point in time. That might not come for a couple of days, weeks, but at one point or another, price is going to go down to there, and it's going to revisit every single time. So right now, what's happening? S&P is in a huge uptrend, right? It goes down, doesn't hit equilibrium. Like, we're going to have to revisit equilibrium all the way over here in order to keep going up, because there's not going to be, the liquidity is just going to burn out. And that's when Fibonacci comes in as well. So Fibonacci is also equilibrium, and you can use this with Bitcoin as well. I'm not going to get too into the Bitcoin things, but Fibonacci is very, very useful. So right here we have this high, and then I'm going to bring Fibonacci all the way down to the low. So what's Fibonacci's doing is it has this 50% marker, and then it has these levels 1.272, 1.618, and 2. So these are my levels that I always use. I use them for Bitcoin. I use them for everything. And once it hits those, that's when you want to take your money out. So say you are in the short game for anything. You're going to be like, okay, I got in. I'm going to show it for Bitcoin because, you might as well. So I already have my levels drawn out on Bitcoin. but let's say I don't. So right here, I have the Fibonacci down to this low. Oops. I have the Fibonacci set at this high right here, and then I have it going down to this low. So when price gets to $86,963 or $36 on Bitcoin, I am going to sell part of my position. When price gets to 103,000, I'm going to sell part of my position. When price gets to 122,000, I'm going to sell part of my position. Because if once price gets over there, it's just going to overextend. So when you see people lose money in the markets, what they do is they don't take profits right here. So if we go to, let's say, so say you did take that trade on Wednesday that we looked at before with Fibonacci. So Fibonacci would have been like, if you're just using Fibonacci, we have it to this high and to this low. So then, once it hits this 50% marker, you would have been like, okay, the fair value gap, we went over this. Fair value gap gets hit. I'm putting my position right here. I'm getting in right here. And I'm going to sell part of my position right here. And maybe you don't like that risk to reward, and maybe you're going to be a little bit more risky. So then you sell part of your position right here, and then you hold the rest for right here. And it was 2 ticks away. But look at this. It smacks it perfectly. And then it goes down a little bit. And it goes, what does it go down to? It goes down to that 1.6 level. And then it continues going up. And that's all part of a retracement in Fibonacci. And it's really just kind of that simple. And a lot of people use smart money, and that's when a lot of people get in. So say you're in a trade. So say you did take this trade. So say you took this trade. And you get in right here, like we said before. Stopped right here. And you're worried that your position's going to get stopped out because you put your TP right here. So right now, you're worried that your position's going to get stopped out because you put your take profit right here. But then you go to the 5-minute. Go to the 5-minute time frame. And what do we have? We go to the gone box on TradingView. We go to this high. What happens? Fills equilibrium. More confluences get filled. We have this inverse fair value gap. Pushes out. Hits your TP. And that's all it is. Like, it's hitting. Like, whenever you're scared or worried for a trade, but say you get in right here. Say you get in on the 5-minute. Say you just get in off of this break of structure. It's like a 1-tick fair value gap. You get in off of this break of structure on the 5-minute. Put your TP right here. And now you're worried because, you have equilibrium. Or you got in before without equilibrium, which is okay. And that's going to happen. Majority of the time it's going to happen. But then look what happens. You get in, goes down, hits equilibrium, continues going back up. So what is it doing? It's seeking out that 50% marker, and then it's going to continue going back up. And this has to match your daily bias. Like I said, this has to match your confluences and why you're getting in. You can't just be like, okay, I see equilibrium, I'm going to get in. What you have to do is be like, okay, 50% marker gets hit, what other confluences are there? And that's just to keep you guys on a loop. And it's a super quick video, or super simple video. And you can do this on the monthly chart, the yearly chart if you'd like, any chart that you would like. And see right here, look what happens. The S&P is in this huge uptrend. Huge. Equilibrium doesn't get hit right here. Equilibrium doesn't get hit right there. Right here. Doesn't get hit. Doesn't get hit right here. What happens though? We go to this high. Look what happens. Goes into this equilibrium right here. Goes back up. Everyone's selling their positions because they're scared. When in reality, it's just got to retest this area. And then it's going to go back up. And it's really kind of that simple. And this video will be super quick. Hopefully this guy's helped you a lot. All it is going to the 50% marker on the Gone box. To edit it, just double click it, go to visibility, or go to style, do the 0.5, make it any color that you like, and yeah, easy video. Hopefully you guys enjoyed it. There's nothing else to say besides equilibrium. Hopefully you guys enjoyed it. Thank you.